Semiconductors are weakening, which means the market is relying even more heavily on the Magnificent Seven. Now, Tesla and Google are about to report with AI spending and free cash flow under growing scrutiny. So today we're asking, can the Mag 7 keep carrying that S&P 500, or is this market's last pillar starting to crack? Let's dive into this and have a closer look. So stress a couple of very important points. It's just there are 500 companies in the S&P 500, right? It sounds like a very diversified basket of the top companies in the U.S., but one third, right? One third is all concentrated in the Mag 7 stocks. And then take these new huge mega cap semiconductor names, and between the two of them, you're soaking up 45% of the market capitalization of the S&P 500, literally in a small handful of securities. And so while, the broader S&P 500 and the rest of the stock market could arguably behave, the thing is that it's very hard to imagine the S&P 500 making a huge push to fresh new highs and running in a bull market mode unless the semiconductors and the S&P 500 have set it up for them to and the Mag 7 set up for them to continue higher. And so this is why it's so critical to see what happens, and the tone that's going to come from Google and Tesla is going to set the mood in going into the rest of the Mag 7s next week. And so will they beat? It's I don't want to pretend like I know. I'm saying it's just really important to see what comes of this, what's happening. First of all, going to the Kospi, because this is where the AI epicenter momentum really was most evident. It was a Kospi that tried to rally and met immediate selling. On top of that, this morning, Semiconductor index SMH in the pre-market is looking at an open around 570. We'll see where it actually opens. That's back below the 50-day moving average, back down. And so the semiconductors have been selling for a month. I mean, the cost is 30% off of its highs. The semiconductors peak to trough dropped 20. And we've seen, even, let's say, the Nasdaq itself weakening back down to those June lows. A very heavy top. Point here is that these Mag 7s are playing an important role. So when as a basket, we did have start. This is the key: is that the S&P can arguably keep going if the Mag 7s can put the rest of the market on its shoulders and carry it for another bull impulse. And Mag 7 run has been a very advance in Apple. Strong run on the upside, pushing to the high. But the story is not as bullish on the rest of Mag 7s as it is. And this is why Google is such an important one to watch. Now, first of all, I want to stress what this earnings is about to be on Google and every other Mag 7 really tells the story. And this is about free cash flow, semiconductors versus hyperscalers. And the Mag 7s mostly fall into the hyperscaler category, which is they used to be rich with huge amounts of cash. Now they're burning all that cash for data centers and AI and everything else. And these semiconductors are the ones that have been taking all of that free cash flow. This is obviously what allowed these semiconductors to have such an extraordinary bull run on the upside. But the Mag 7s are a huge component, and their cash flow is being eaten up. So one of the key focal points is not just going to be what the number is from Google or what the number is from Tesla or Amazon or any of these, but rather what is their guidance? What is their free cash flow? Is there some concerns about the way that their spending is? You can observe here, Google had a beautiful wedging formation or a bull continuation pattern. In fact, when back at the start of July, it had all the technical back for actually making a move very similar to Apple. Now, this was very challenging because they did a huge capital raise, dilution, that whole process, which acted like a weight on it. But this is a pretty fragile moment right now at its 50-day moving average. And the next move after this post earnings is going to set the tone. Why? Because if it is bullish, which is possible, have a gap back above the 50-day, back above its 1 month trade range, and potentially set a new bull advance the way Apple was running on the side. And this would really give a bullish tailwind on the entire market. Consequently, if it alternatively was a disappointment and we had a gap to the downside, we see is a continuation pattern that actually sees Google go retest those marks and really take the wind out of the stock. Now, I'm not going to pretend like I'm an analyst that knows how to anticipate what the earnings are. I'm much more a trader to focus on how did everyone respond to the actual earnings, and that is what we're going to be watching tomorrow. We're going to see how the market absorbed it as big money selling into positive news. These are the little puzzles to solve on what's next for Tesla. This is another big behemoth, obviously, was in the center of focus from all these other, headlines, including, well, the robo taxis and everything else accelerate in terms of their expected launch. Now, Tesla is clearly weakened. It's a multi-month range, not, but we have active distribution. Again, this is what a moment like Google, which is if the earnings was interpreted bullish, reclaim above the 50, potentially set a motion to retest its previous highs, then that could set a positive tone for the entire Mag 7 basket going into next week. But if we, for whatever reason, marginal Mag 7s that need to do some of the heavy lifting start off poorly out of the gate, even if it's a neutral to slightly weak result. Then it's going to bode poorly, sorry, for the whole stock market, because at this stage the semiconductors really lost their momentum. And by the way, another big earnings coming out tomorrow, release of Intel, which obviously is off of its highs. Was this just a retrace? And are we going to have Intel, or does Intel create a heavy resistance here and stall out? These are the puzzles that we're going to try to solve here. Overall, S&P 500, and it needs leadership in order to break this ascending triangle bullishly to the upside. And we're going to, and these earnings between Google, Tesla, and the earnings we get next week are going to play a pivotal role in determining what the next move is here. And so that's the thing to watch. Obviously, oils are going to be a factor. We can talk about that in the coming sessions. These earnings come out and the I'm going to wrap things up over here. I'm going to jump on to big picture trading here in a half an hour time with my big picture trading members in the Where's the Trade, where we talk longer term positioning, how we've had a semiconductor short position on that's been working. We've been long crude oil that's been working. Both trades are going to active in today's session that we're going to be talking about, and obviously talking how the S&P 500 protection and or speculation on the downside is actually still very cheap right now, and lots of ways to potentially either protect your portfolio or try to profit from a potential breakdown in these markets. All of these things we'll talk about in Where's the Trade. So we'll see you if you want to, by the way, try out a free trial of Big Picture Trading. click on this link in this chat or just visit bigpicturetrading.com. Click on the 14-day free trial, jump in there and see what we're talking about during that where's the trade. It's completely free, no credit card required. We'll see you online for that. Otherwise, those just enjoying this on the social media, give all of you an update tomorrow after we get the results. Thanks, everybody.